I kind of feel like this is one of the reasons why selling stock options can be so beneficial because it gives you activity, economic activity, even when the market's boring. So if you're selling stock options, then that's great because you can always sell stock options in a sideways market, a down market, or an up market. And that sort of allows you to avoid the monotony of having some asset that's just sitting there staring at you for 5 years and doesn't move at all. You can make income from that asset while it's there. An asset is meant to generate something for you beyond just capital gains. Capital gains is when the value of the asset goes from here up to here, right? That's what you're hoping for. Like I buy a house, I hope the value goes up. Well, some people also make income from their houses. So the same way you can make income from a house while you wait for the price to go up, you can make income from your stocks while you wait for the price to go up. So feel free to join us in Prime class, drboyceprime.com. That's the URL, drboyceprime.com. Okay, so let's see here. Next question is, let's see here. Dr. Watkins, could you assess BTG? This is a gold stock. Okay, so this will be my last stock for today. All right, so BTG, you know what? I think I talked about BTG um, before, but I can't remember. But I would say I think it's Bit to Gold or something, if I'm not mistaken. Yeah, that company I don't like that as much as in terms of a gold play. I think it's okay to add it to the portfolio. But I remember the stock is yeah, it's down to like $3 a share, and I think over the last 6 months, I don't think it's done well lately. I don't know. Scratch that. I'm lying. I'm looking at here. Let me show you. Let me just pull it up. It's actually done really well lately, so maybe I'm sounding crazy. Let me look at the information before I start making an opinion. The reason companies like this make me nervous is because these little small companies, they sometimes bring a lot of risk and volatility along with them that can cause significant problems later on. All right, so here, this is 5 day, 1 month. Okay, 22%, nice. 32% last 6 months, year to date, 40%, 1 year, 35%. Last 5 years, though, it's down 29%. So the company's, I think it's, well, I'm not gonna say it's tiny. It's a $6.5 billion Canadian company. So it's basically a Canadian mining company. So exposure to BTG as a way to connect to gold, absolutely. I'm not gonna say that it's not good. I almost feel like the best ways to connect to gold is either buying an ETF directly or buying either buying the ETF or buying just gold directly somehow. I don't know if buying individual companies makes sense because if you buy individual companies, you should buy multiple instead of just picking one. Because what happens when you pick one company, you're taking on a lot of extra risk that you don't have to take on that you're not going to get rewarded for. They call that idiosyncratic risk in finance. That's or what we call inefficient risk, right? It's like, for example, if you say to me, would you risk your life to save your daughter? And the answer is absolutely yes. I would take a risk, I'd do whatever. But if someone says, would you risk your life to get a candy bar? I'd be like, no, I would not do that. I would not risk my life for a candy bar, right? That because that would be stupid. That'd be inefficient. So when you buy one individual stock, you're taking on a lot of inefficient risk that isn't worth it. So the best way to do it is just buy your stocks in bulk, buy in a tribe. If you can't buy them at one time, just keep each week, add new stuff to the point where you got 25, 30, 40 investments and no one investment can destroy you. And that is where you have what is called efficient risk. Efficient risk, on average, you get rewarded for that, but inefficient risk, you do not. Okay. All right. So why is everybody congratulating Jen? I saw Jen was getting congratulated.